There is pressure in the markets today, the grain markets anyway. John Jenkinson with you, and let's go to the corn board right here first. Find out where March is standing at this point, 377 and a quarter. That is down 2.5 cents now. We've been a half penny below that even at 376 and 3/4. So about almost a little less than a 4 cent move here in the corn market just on today. December is still above $4. It's at 4.01, got as low as $4.50 cent. Right now, it's down 2 pennies. Now, the soybean market, a little different story here. It's down 4.5 for the March at 918 and 3/4. Hold your place right here. We're going to come back and talk about that in a moment. September down 4 3/4 at 951 and 3/4. So let's go through the rest of these grains then. We'll come back to soybeans in a moment with Brian Hoops. March Chicago wheat down 7.5 now, 511 and a quarter. That's a 0.5 cent off of the low, and we've been riding about a 0.5 penny off of the lows in these wheat markets. March Kansas City wheat down 7.5 at 499 and a quarter, 3/4 cent off of the low. March Minneapolis wheat down 4 1/4, 569 and 3/4. There again, a 0.5 cent away from the low. December cotton down 30 at 73.98. And right now on the line with us, Brian Hoops, Midwest Market Solutions. Brian, it's good to talk to you today. Got a question about this soybean market. You know, yesterday we dipped below that 200-day moving average, came back to close above it. Now we've got more pressure here in this market. What are your thoughts when we look at a soybean chart?
Yeah, we're getting a little bit of pressure coming out of the political news of the Justice Department unveiling charges against the Chinese tech giant, and that comes right ahead of the talks that were expected to commence later this week between the U.S. and China, and that really puts a deal in jeopardy. Meanwhile, we have a crop size in Brazil and Argentina both being downgraded slightly. We went from about 187 million metric tons that the USDA said back in December. Now there's some private forecasters talking below 170 million. That would still be the largest in the last 5 years, but it is putting a little bit of pressure against this soybean market. We're really in much of a sideways type pattern going forward in here, trying to put in a little premium because of weather, but with political tensions starting to increase, it looks less likely that a deal will be completed this week.
Brian, is the trade talking about anything in these government numbers that'll be coming out that could maybe build a little bit of support in any of these grain markets?
I think the one thing people are going to look at is how closely the USDA is in South American production for Brazil and Argentina, how big that crop is. They were pretty large in the month of December. We haven't seen an update since that time frame other than private estimates, and they have been lowered quite a lot. And if the USDA concurs with that or even goes much below that, we should see a lot of support in the soybean market. However, it's going to be really a waiting game to see if China does have to step in and start buying U.S. soybean products because the crop size in South America is too small.
Okay. We need to find out what's going on in the livestock trade, so stay with us. We're going to do that when we come back from this break here on the Market Ed Report. Cattle market on the higher side on this Tuesday. We'll go to the live cattle market here first. And the February is down 3 at 126. Well, just changing. Now it's unchanged at 26.40. And that's only 30 cents off of the low, but it's, 23 cents off of the high. So let's go on to April, up 35, 127.72, and June up 38 at 117.38. The feeder cattle market was on the higher side, still is. March up 33, 144.68. April up 30 at 145.90. May feeder cattle are trading at 146.22, and that's just off of the high by, not too much, a little over 20 cents, and that's up 30 cents. All right, on to the hog market. This market is higher as well, with the exception of the front month February. It's down 30 at 57.67. But the April's up 88 at 63.20, and the May is up 90 at 69.33. Brian, first of all, you and I were talking over the break here about this cattle market. You mentioned the term contract highs. Are we getting close?
Yeah, in fact, April just poked its head above the old high and made a new high this morning. and the rest of the contracts are hovering near those old highs as well. So, it's never technically bearish when you're posting contract highs. The market's up there for a reason. The cash trade last week was a little bit of a disappointment, but with the very cold temperatures this week, that's stressing cattle. It's going to keep weights down. That's longer-term positive for this cattle market. I don't think there's a lot of people who are interested in selling a market that's at contract highs and has some good fundamental support underneath it.
Sure. What have you been hearing about the cash cattle trade maybe this week? Is steady in the offing, or do you think that we could pull another dollar off of this?
Yeah, I think absolutely we're looking at steady money. In fact, we have just seen in the last 10, 15 minutes a bid of 123 in the north, and that would be steady with what they traded at last week. It was a steady trade on a dress basis as well. Just some southern trade that weakened last week, and that's where a lot of the cattle are going to be at this week as well. That's where the bigger numbers are coming in that Texas, Kansas, Oklahoma panhandle. So hopefully we can get through those numbers okay and have at least a steady money down south, maybe even higher money in the north.
Brian, after several sessions of being under quite a bit of pressure, this hog market finding a little bit of firmness here.
Yeah, and I think it's just more of a technical bounce than anything. There is, bitterly cold temperatures and transportation issues that would slow down some of the cash movement that could be providing a little bit of support. But from a technical standpoint, this was the first session in the last 5 that we did not make new lows for the move, and that has allowed us to see some short covering come into the hog market.
Is there anything fundamental that will help this short covering?
Yeah, the cash markets, if we can firm that up a little bit because of the next couple of days, because of weather issues, of extreme cold, no one wants to market any livestock. You want to keep them kind of safe in their area where they've been accustomed to in their housing, whatever type of barn that you're in, but you don't want to take them out on the road, out on trucks where you could see increased chances of weight loss and possible death loss.
That's a very good point. Brian Hoops here with us with Midwest Market Solutions. He is the president there. And Brian, always good to visit with you. Thank you very much for the analysis and the insight.